Now there's good news for the Indian economy. Bloomberg has announced that it will be including Indian government bonds in its Bloomberg Emerging Market Local Currency Government Index and related indices starting January 2025. Now this follows a similar announcement by JP Morgan earlier in this fiscal year. Now what does it mean for us? Now this inclusion is expected to attract foreign investors who track these indices. As they aim to match the index composition, they will need to buy Indian bonds, potentially increasing demand and influencing the Indian financial market. Now, the inclusion will be phased over the next 10 months, with the weightage of Indian bonds gradually increasing to their full market value by October 2025. Now, not all Indian government bonds will be included. Only fully accessible route or FAR bonds, which allow foreign investors to easily buy them, will be a part of these indices. Now, to be included, these bonds will need to have at least $10 billion worth of outstanding and a maturity of at least 1 year. Now, starting in January 2025, a total of 34 FAR bonds will be gradually added to the index. Now, this initial selection will represent 7.26% of the entire index's value, which is currently $6.18 trillion. Now, this phased inclusion is expected to attract billions of dollars in the foreign investment to India's government bond market, as there are no limits on how much foreign investors can buy to these FAR bonds. Now, foreign investors have been showing increasing interest in the Indian government bonds. Now, since the beginning of the current fiscal year, investments by foreign portfolio investors through the FAR, which is the fully accessible route, have more than doubled. Now, this is evident in the data from the Clearing Corporation of India Limited. As of 6th March 2024, the total value of the FAR holdings by FPIs stood at 1.68 lakh crores, as evidently visible on the screen. Now, this is significantly higher compared to 77,441.35 crores as on April 3rd, 2023. Now, this surge in foreign investment is likely due to several factors, including the anticipated inclusion of the Indian bonds in the JP Morgan Bond Index earlier this year. Now, this trend of increasing monthly inflows into the government bonds is also set to be the highest since April 2020, marking the longest continuous period of growth since the introduction of the FAR category for index inclusion. Now, once fully integrated, India is expected to be one of the only 3 countries alongside China and South Korea to hold a maximum weight of 10% in the Bloomberg Emerging Market Local Currency Government Index. In the market cap weighted version of the index, which considers the total value of each country's included bonds, India is projected to become the 3rd largest country following China and South Korea. Now, it is expected that $2 to $3 billion of additional investments will be received due to the inclusion in the Bloomberg Emerging Market Index. Now, this is lower than the potential inflow from the Bloomberg Global Bond Index, which has a wider investor base. However, the inclusion in the Emerging Markets Index opens the door for potential consideration in the Global Aggregate Index. Now, this could bring in significantly larger investments, estimated at $15 to $20 billion. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com